Hello, everyone. Jeff Koppel, Realtor and General Contractor. Today, you might notice I'm not wearing my contractor hat. Well, that's because I'm going to talk about something that's more along the lines of my activities as a realtor. What I thought I'd talk about today is owner finance sale. I've actually got a listing right now in Denton, and I know I've had a ton of showings on it, and I getting some pushback from realtors because they may not be familiar with owner finance. So I thought I'd explain it, our particular method of doing owner finance. First of all, the owner finance is being offered on this current listing is basically a first mortgage position owner finance. So in terms of the way we do it, we qualify the buyer through an RMLO or residential mortgage loan originator, just like a bank does. Anytime you apply through a bank is going to send your application through an RMLO to check your credit, employment verification, savings history, all that information. It's the same type of process that we go through with our system of owner finance sale. But the only difference, the main difference, is the seller of the property is the underwriter. In other words, they're the ones that decide whether or not they want to approve the buyer for the purchase. So in terms of the mechanics of it, the way we do it, the way we do our owner finances is we also use a servicing company which collects the payments from the buyer. Now that's a PITI payment. That's principal, interest, taxes, and insurance. And the servicing company basically receives the payments from the buyer every month. And then when taxes and insurance are due, they pay them. And they also do year-end tax reporting, which you'll need a form for your taxes. And they also do buyer credit reporting to the agencies. So in terms of mechanics and pieces, it's the same as the bank. The main attraction to people wanting to do owner finance sales in the case of most investors is a lot of them used to be, landlords, and they may be to a point in their life where, their kids are living in different parts of the country and they want the ability to be able to travel, which is the case with one of the investors I'm working with right now. So, he still will get the, continuing monthly income from, from the property, but he'll be the bank instead of the landlord. And so that's really the main difference between, say getting a loan through a bank versus getting a loan from a private person, like on an owner finance deal. The note, in terms of, the way it looks, it's the same note that a bank would create. It's marketable on the secondary mortgage market, just like any bank loans are. The main difference is this investor is going to hang on to the loan and receive the income directly from that loan. So that's the main difference. And if y'all have any questions about owner finance, I've personally done many owner finance deals in the past and very familiar with the process and all the pieces that go into it. So if you ever want to, have any questions answered about owner finance, I would be more than happy to answer your questions for you or your potential clients. So anyway, I hope this information helps. And as always, I'm always looking for topics to answer on with a video. So if you have topics, send them to my email at Jeff Koppel, that's Kappel, @gmail.com. And I'll be happy to create a video. Thanks and have a great day.